Good morning, everyone. Welcome to Startup Change Leaders meeting. So we are already live on Facebook, and we will be talking about a very interesting subject today. That is startup and its funding trends. So many challenges are being faced by people in this area. So we will look at what are the funding trends. Let us make it a very interactive session where we will utilize our individual uh, you know experiences with funding, and let us look at how the funding market is behaving as of now. There are a lot of challenges though, because the startup funding area is evolving, and we see that a lot of new players have come in this market, but some international players have gone slow because of the obvious reasons, because the market is having they are having lots of challenges with their own economies, so they are not looking out as of now. But surprisingly, the Indian angel investors have really come up to the rescue of all these startups, and there is an increased amount of interest in angel funding by the Indian funding entities, and there are many people who are actually getting into this funding, for the startup. So let us look at what are the various trends which are there in the market, and why there is a slowdown, and why how these people can have a better funding options. So I think people, when they conceive the startup, they sometimes feel that anything and everything will be funded, but that is not true. Uh, I have come across various ventures which are very plain vanilla in nature. They don't have, that innovation to talk about. They don't have a company which will have a fast growth, and there is no unique product. They just have, for example, I came across someone who is just trying to be another software company. Now, if you are just a software company, there are many software companies who are doing business in India. So, what niche play you have, what kind of uniqueness you have, what kind of product you have, what kind of service or technology you are going to use, which is going to be different. And that is where I think the funding will come in, because nobody is going to, fund you because, you have come up with a project, or you are just an entrepreneur, because funding is being done in a project which is different, which is having some uniqueness, some uh, proper service or technology it talks about. For example, there are a lot of AI projects which are there in the market. And of course, uh, they must have the entrepreneurial spirit, and a good high potential for growth, because at the end of the day, investor looks at how they are going to get their money serviced. So definitely and how this valuation is going to grow for the company in which they are investing. So it's all about what is the return on their investment, which you have to justify by with virtue of your project, your uniqueness of the product, that innovation, what kind of IPRs, patents you are actually registering. That is something which you need to work on. And of course, there has to be ability to disrupt the traditional industry and to create an entirely new market. People often operate in a very dynamic and competitive environment, where they seek to solve a specific problem, or they meet a particular need. But I think it is better that you focus on this area where you actually create something which is fundable, because every project which goes into the market by the name of a startup is not open to funding by investors. You have to have your uniqueness. You have to have your USP, so to say, and of course you need to solve a specific problem which has potential to become a very big organization, and the growth story and the trajectory of the growth has to be very, very perfect and unique. So let's look at who are the investors in the startups. One, of course, the venture capital firms. So VC firms invest in startup in exchange for equity with the hope of achieving some significant returns when the startup grows and becomes successful. Then there are angel investors. So there are individual angel investors who invest their personal funds into startup at an early stage, and they help all of them get off the ground. So angel investor groups are really becoming bigger in India. There are a lot of people who have, instead of putting their money on the stock market, they have realized that in the stock market the growth will be very steady, and there is a limited percentage up to which their money can grow. But if they put their money in startups, then the growth potential can be 10x or 20x or 30x as well. So people who were early stage funders in companies like Paytm, or companies like Bharat Pay, or companies like Policy Bazaar, for example, or some other such startups, they have really seen that the growth potential which is there in startup, which is having really good product and good capacity to create valuation, because the revenue potential is too much. They make a lot of money in that, and when they take the exit, they are making much more than what they would have made normal stock market investment. So the angel investor tribe is increasing. They are corporate investors also now jumping in. So established companies, they invest in startups in a strategic move to gain access to innovative technologies or ideas. We have seen a lot of acquisitions by Hindustan Lever, for example. A couple of such companies are there who are, whatever product they are in, if there are some star products in the startup space who are really doing good, they kind of either invest in those companies or they pick up those companies by way of a merger and M&A activity. So this is where I think the whole scenario is opening up. This is where the startup ecosystem in India is thriving. So this is, I think, something very good, very positive news for all of us. And of course, government grants and subsidies, we all know we have, funding programs to support the growth of startup. Government of India through DPIIT is supporting a lot of, through they are providing subsidies. So there is a subsidy of 20 lakh rupees grant, which is given to all the good startups where you become eligible for this grant. And this is being done through various Atal Innovation Missions, which are there all across the country. And so you go present your case to them. And if your startup is really good, they will be too happy to provide you 20 lakh rupees fund. Then there is a 50 lakh rupee loan facility also, which is available. So you go to the government and take that money as a soft loan. Loan is available at a very competitive rate of interest. And then, of course, there is a crowdfunding, which is there are companies which are actually now working on raising funds through a large number of individuals, uh, and there are online crowdfunding platforms which are actually helping investors identify good startups, and they collate their combined strength to invest in those startups. For example, there are companies in Gurgaon, and I know a couple of them in Mumbai as well, where what they do is, okay, you want to invest 10 lakh rupees. We will tell you what are the four different startups, in which you can invest. So 2.5 each can be invested in 4 different startups. And out of that, even if 2 do very well, that will take care of your investment. So you are spreading the risk. You are actually making a very positive, uh, contribution to the startup ecosystem. And at the same time, you stand to gain if the valuation of even one startup out of the 4 invested by you go up. So you tend to make a good amount of money, because the exits are in this scenario sometime at 20x or 30x as well. So I have a friend who exited in a startup with 42x. So there are live examples. People are now tasting the success in this startup ecosystem. So and the word is spreading that, oh, if this person has made money, why not me? So that's how things are evolving in the startup ecosystem, and more I know the high net worth individuals, as well as even corporate players, are actually investing into employees also, high level employees like CEOs, CFOs of various companies. They have opened their portfolio to startup investments. So they are very open to investing in the startup ecosystem, and that is what we see as a very positive sign of changing trend in the investment in the startup world. And that is where I think all of us need to be watching out as to how things are evolving in this ecosystem, and how things are going to be looking good as a startup overall situation. So if you look at the apart from crowdfunding, accelerators and incubators are also there, who are providing funding, mentorship, and resources to startups in exchange for equity. So this is again something very positive. So when they are offering equity to the market, so they are actually providing this resources to the startups, and the top sectors for startup funding, if you look at, one, it's technology and software, because this sector has high growth potential, especially in AI, the ML and SaaS, and the cloud-based solutions, and of course, India has a lot of tech talent. There's a huge move towards digitization of the overall ecosystem. So for that, all these technology and software companies, they have a very good potential, and they are having lots of success factors which are available, and these companies find a good number of investors also, because the potential of growth is humongous. Because if your concept is too good, if you are solving a problem which is a real life problem of people, so you tend to grow very fast, and it's all about growth. So if you're growing fast, definitely people will invest in your company, and they will be too happy to make money along with you. So you are offering a platform to people to make money along with you. So that's the key. Then comes the e-commerce and retail. E-commerce, we all know, we have seen in the COVID times, there is a boom in the e-commerce market. And in India now, growing middle class is actually using lots of data, and internet usage is very high. So they are presenting opportunities to online retail and consumer goods for thriving. So they are not only thriving on their own, they are making the other brands getting established, and a lot of new age entrepreneurs have come in who are selling their products to people online. So that is where I think the success lies for the people who are into this market. Then comes the healthcare and medtech. So healthcare, of course, the market is expanding, because I know certain companies which I'm advising, they are into home healthcare. There is a company called HDU, which is into ICU at home. So we have so many players who have come up with unique solutions, because the population is aging. The people need healthcare. The hospitals have become very costly. So if you can get the similar service or a better service at home, why not? So the people who have some chronic problems, or there are old age people in home, they are willing to spend money on home healthcare. Even the equipments which are being sold by these healthcare companies are phenomenal. I mean, I know that they are selling hospital beds. They are selling. They are giving on rent also these beds. They are giving on rent the wheelchairs. They are giving on rent the walkers. They are giving on rent the CPAP, BiPAP. If you are having some sleep issues, if you just use CPAP, BiPAP, all these issues evaporate. Even snoring problem people having, they use these equipments to make sure that they become healthy, and the longevity of their life is there. So healthcare and medtech is one area, especially after COVID. People have realized that there is a huge potential. So there's a lot of traction coming into this area. Telemedicine and medical technology innovations are also there, which are helping the evolving of this health sector. And then comes the fintech, the financial technology. Of course, we have a lot of population which is still not on banking portals. So there is a huge opportunity for fintech startups, and they are providing digital payments, lending, financial inclusion solutions. Companies like Paytm, as I mentioned earlier, a couple of others, Bharat Pay, and many others have really, PhonePe, they have really come up very well, and they actually have made this market more open to investors. and they are attracting a lot of investors in these segments. Then comes the education technology. It grew very fast in India. We have stories like Byju's, which became number one, unicorn of India. But at the same time, the online education, e-learning platforms, and the large student population uh, is actually creating a lot of tech-savvy youths. So there is a huge potential in this area, and we will see a lot of evolvement also in this. We have seen recently Physics Wala, who has come up with, because people, they were kind of vary from online education only. So they wanted physical come online kind of a thing. So that is where this Physics Wala emerged as another startup, which is offering physical classes to people, so that they can actually understand things better, and they get better, you know overall, the better traction from the market. So, if you look at the reasons for growth potential of Indian startups, of course, the market size is huge, because we have massive population base, we have a growing middle class, we have an increasing purchasing power, we provide substantial domestic market for startups to address, and of course, there is a digital transformation. So there is a rapid adoption of digital technologies. Internet connectivity is becoming better. 5G is a reality now. It's going to come and change the whole scenario. A lot of tech-driven solutions across various sectors will come, which will definitely change the marketplace in totality. There's a lot of government support also, where government is actively supporting and promoting entrepreneurship. They have initiatives like Startup India. They are also providing regulatory and financial support to startups. So that is where I think uh, government is very keen on bringing the large pool of resources into this area. And there is a young and skilled workforce which is available. So that is not there in other parts of the country. So sorry, the other parts of the world, so to say. So we need, all the startups need a lot of talented people who are willing to fuel innovation into the system, and they have a lot of creativity to add to the value of the startup ecosystem. And that is where I think everyone is feeling very positive about the startup movement in India. And that is where I think a lot of boom is happening. And tech industry is also booming. So IT and software development sector is attracting a lot of investments and fostering technological advancements. So if you look at the fund allocation, how this uh, is happening in the startup ecosystem, there are pre-seed and pre-product funding, which is there. That is at the early stage, when you only have a concept and maybe MVP. But you can go to the market, present your idea, and you get pre-seed and pre-product funding. Then there are micro and nano funds who are there in the market, who are actually uh, fueling a lot of money into the startup ecosystem. Crowdfunding we have already discussed. There is a revenue-based funding also, which says that, okay, you achieve this much of a benchmark revenue, we'll fund you this much. So people are doing a lot of innovation in funding area also. So revenue-based funding is also there in the market. And recently I came across a company which is into uh, bill funding. I mean, you raise your bill, and they will kind of fund you for the working capital. So you have orders in hand. You go ahead, supply the product, and against that you get the money from instead of the buyer paying you. So buyer may pay you after 60 days, but this company will pay you, immediately. So it's kind of a factoring which is happening in the market. Also, self-funding and bootstrapping. That's the very traditional way of getting fund through friends and relatives and people who know you, who trust your skills. They put money on you, and then you can make growth happen through those, various innovative things which you can do. And of course, there are you know angel investors who are funding in the startup ecosystem. There are strategic partnerships as well, where people they can come with you. They can say, okay, we will put 30% equity or 40% equity or 49% equity or 51% equity. Depends on what kind of appetite they have. And there are strategic partnerships which happen in the startup ecosystem, which can be very useful for the thriving of the entrepreneurship. And of course, venture capital funding is happening. So let's go a little deep into what is this crowdfunding. Uh, you know, mm, this is basically individual investors. They can invest in early stage businesses through equity ownership. And basically, there are a lot of online platforms which have come up, which connect entrepreneurs with those kind of potential investors. So it's a kind of a group of investors getting together, and they start funding into the startup ecosystem. So they receive equity shares against the various investments which they put in. Uh, then, of course, the crowdfunding campaigns are hosted by these online platforms, where they present the business plan and the financials to attract the investors. So it's a win-win situation for the platform as well as the investors. Then there are individual investors who know that they can invest different amounts of money in the startup. And of course, there are people who are looking for potential returns. So startups who succeed, they realize that the returns on their investment through capital gains or dividend can be achieved. So that is what all these crowdfunding platforms do. Angel investors, we all know, they are people who provide support to the startup at early stages, and that is why they are called angel. So they have a very big role to play for funding the businesses in the entrepreneurial ecosystem. So they are, they are bridging the funding gap of these startups. And of course, they not only provide the capital, they sometimes provide the guidance, they provide the expertise, and also they help entrepreneurs turn their ideas into a very successful business. So the entrepreneurs who are seeking angel investment, they have a well prepared business plan, and they have a very clear value proposition, which is very compelling. And of course, they are crucial to attract the potential angel investors to their venture. So this is how this tribe has risen, and we have growing number of people who are joining this angel funding as a passion. And what they do is they actually put their hard-earned money into this business, and they are making good growth. So the factors which are contributing to the popularity of angel investments in India, one, of course, there is a growing startup ecosystem. So there are opportunities available where entrepreneurs are coming up with their innovative ideas. They go to the market, try and present their pitch deck to these angel investors, and you know these investors analyze as to what is the best for them, either by themselves or through their managers who are managing the angel investment for them, and they put in their money after analysis. So there's a lot of traction which is happening. A lot of highly qualified people are there in this market now, who are putting in their utilizing their experience of lifetime, and actually guiding and helping both sides. One is the startup and the other is the angel investor. So that kind of a matchmaking is happening through people who are having seasoned knowledge about how this angel investment happens, and they are guiding these people. So there is a high demand for funding, because all these startups which are coming up, they require significant amount of funding, and so there's a lot of interest which is coming into this area with angel investors who support these ventures. Of course, government is also very supportive of all these initiatives. They are providing tax exemptions. They are having relaxed regulations, and a lot of innovation-friendly environment is there. And there are experienced entrepreneurs and mentors who are sharing their knowledge base with everyone. Like we do these sessions, we have many mentors working hand in hand with us in this group, where we keep on exchanging notes, and we know that this knowledge sharing will definitely help someone who may need it. So that is where I think all of us are trying to contribute our best to this startup ecosystem, where we are continuously trying to educate people about what's happening, what is the best thing to do in this industry. And so that is why we chose this topic today of trends in startup funding, so that people who know, who need funding support, who need mentorship, who need guidance on this, they can be benefited. And of course, when the going gets tough, the startups get going. So that is where I think the MSME sector and the startup sector has a lot of good role to play. So of course, there is a global recession. Everybody is talking about it. Everybody is talking about that. But I see, because since I'm working very actively in this industry, there are seed funds which are working round the clock. There are Series A rounds which are happening. Seed funding is also happening, and of course, many geopolitical and macroeconomic complexities are there as of now in the ecosystem, but still it's thriving, and there's a lot of opportunity which is there for the startup entrepreneurs, as well as for the people who are looking forward to get into this space. So profitability is the key matrix for capital deployment. So I think that is, everyone is looking for profitable companies to invest in. I see a lot of traction happening, especially for the profitable companies. People are very much willing to invest their money in those companies. Then, of course, there's a measured approach for mid-bracket size companies at the growth stage. There is a fintech and logistic sector which is going to be a hit sector for in the startup ecosystem in India. Then tier 2 and 3 cities have a lot of potential. There is a huge market which is opening up. So these cities are becoming more and more epicenter of economic growth, and that is where we as a um, ecosystem we are growing. There is a increased democratization of early stage startup funding in tier 2 and 3 cities. So, and of course, a lot of dry powder is there because people are sitting on tons of money and they are waiting for this whole thing to evolve. So, definitely, sorry, a lot of VC investors and others, they are, although they are moving little cautiously, but they are definitely putting their money into the ecosystem. And there are a lot of startups now. People are actually, earlier they were willing to fund a lot of cash burn, but now I have seen a trend that the cash burn is not encouraged. They are looking for startups which are having clear profitability, and that really helps the ecosystem. And because cash burn, of course, is not appreciated by anyone, and the equity crowdfunding over bank loans is something which is in the trend. So why this funding winter is happening? People they talk about this. So there is a correction phase in the market because the cash flows have decreased, and it is becoming a little difficult for businesses to raise money. And that's the honest situation as of now. But the startups which are having higher burn rate or higher acquisition cost, they are finding it difficult to survive. But the startups which have low burn rate but a very good pickup price and very good valuation to offer, they are still getting money. Deals are happening. There are investment bankers in this area who are working. And there is a latest PwC report, which says that this funding winter can last between 12 to 18 months. But having said that, that's fine. It's a cyclical thing. So we have a huge potential of the market, and these factors which are contributing to Indian funding winter, of course, geopolitical tensions because of the war between Russia and Ukraine. That is making things a little worse for everyone. But let's hope this improves. There's a lot of statements and a lot of action happening from both the sides. But the global inflation also is on the rise because of this political tension, and there are various central banks of various countries. They have raised the interest rates. We have seen the international interest rates at the level which were never there in those countries, 4 to 5%. It seems like they are kind of following what India has been doing. And the dismal performance of IPOs also has added to fuel to the fire, because we saw that Paytm and some other IPOs have not done that well in the market. So the VC sentiment and the M&A market also not being so robust is is adding to the whole situation. But these are the factors which I thought that let me share with you. One is the global economic slowdown, which is having some anxious effect on the Indian companies. High interest rate, because all the central banks are increasing the interest rates, so that is actually making the borrowing costs more. There is a banking crisis which is there in the US, and that has further made the liquidity very tight, and uh, so Indian companies are also having some challenge in having access to the funds from global investors. So that, but I think this is a limited time situation. It will pass, and a lot of dependency on foreign investors was there earlier, but I think things are changing. Indian investors are pitching in. There is a huge tribe which is getting into angel investment in India, and we have a lot of action happening in this space. Then there is, of course, imminent recession in the Western countries, because the US, Germany, UK, that has actually impacted the overall scenario. So, if we look at the our today's discussion, the funding is a critical aspect for startup development, and of course, it provides the necessary resources to turn ideas into viable business. There are various trade-offs which can be carefully evaluated by both the funding side as well as the startup side. And you know, uh, although external funding can accelerate growth, so it is essential for startup to maintain balance between the fundraise and the ownership stake retained, because you have to make a balance. Otherwise, if you hive off too much of your stake, that also sometime long-term viability of the business will get affected, because the power centers will be in too many hands, and you may not be able to run the business more effectively. So that's another important aspect. But startups need to be mindful of investor expectations, and they must perform the due diligence and on potential funding sources, and of course focus on creating value and sustainable growth for attracting the investments. So I take a pause here. I'll be open to questions, and we can discuss whatever discussion we had so far today on the funding and the overall scenario which is existing as of now in the startup funding. Yeah. Ajish?
Yeah. Thank you, Rajiv. I have, could you just tell some about this crowdfunding, where some websites or some information, what are all the different counts, crowdfunding places?
Crowdfunding, there is a, for example, company in Gurgaon, which is into, what they do is they charge a management fee. I will not name the company, but I can tell you off separately. What their model is, as I mentioned, they will say, okay, you give me 10% management fee. I will manage your portfolio of startup investments. So, for example, they ask individuals to contribute in the multiples of 10 lakhs. So you can invest 10 lakhs or 20 lakhs or 30 lakhs. And what they do is they spread the risk over of that 10 lakh into, say, 4 portfolios. So they will tell you, okay, these are the 4 startups which we are suggesting to you. They will give you a bouquet of 10 or 15 startups. You can choose 4 of them, and okay, 2.5 lakh each will be put in these 4 startups. They will also kind of monitor the progress of those startups, and will actually keep on giving you reports as to how your valuation has gone up, how the startup is performing, how is their growth potential, and maybe 2 years, 3 years, 4 years down the line, they will actually help you exit also. So they will provide you a report that, okay, now after 4 years of your investment waiting, you invested this much, you can exit at say 4x, 5x, or 10x, whatever is the growth. They transparently help you. They provide you with the exit, and the profits will come to you. And of course, their fee is that management fee. That's how they operate. Yeah.
So it is similar to like a mutual fund. They have expense
Yeah,
ratio.
yeah, yeah. So instead of mutual funds are investing in various, but here it's more democratic. They will take your consent in investing in those startups. They'll present those startups to you, but the exit decision is taken by them, not by you. So they, kind of work on your behalf and actually make your money grow and make your money work.
Yeah.
Yeah.
Thank you. And also you mentioned like your friend exited with 42x. I
Yes.
just wanted to know what was the time frame and
It was
like
around 8.5 years.
oh, okay.
So,
Okay.
so in 8.5 years, he entered the startup a little early,
Uh,
and now when he has exited, he made good money.
okay,
So,
okay,
so that is, you know,
okay.
the
And third,
success of this ecosystem. So I am witnessing day in, day out. So that's what I can share with you.
okay, okay. And could you throw some light on this cash burn, like Zomato, for example, they're spending so much on advertisement. So
Yeah.
that is what is cash burn without getting
Cash
revenue.
cash burn is basically the loss. No, the
Oh,
term cash burn is that you are actually spending more than what you are earning, right?
uh,
So in a way, you are actually eating your own capital, right? And
mm,
but all these companies, in order to acquire the market, in order to acquire the customer base, in order to expand their geographic location, what they are doing, they are pumping money into the system and doing that cash burn and trying to acquire the market. No, Blinkit, for example, zero that there is a 10-minute
Zepto,
delivery.
Zepto.
Zepto is also burning a lot of cash, no? Because they are charging very less delivery charge. They are offering many goodies to the customer in order to acquire the customers, right? So, but their intent is okay. Eventually, they may have, they will not have cash burn. Eventually, they may kind of work out a scenario where they will definitely, be making profits, and they will work for the companies they are working for. But as of now, all these companies. So investor, what I was making was the investors are these days not appreciating cash burn. No, so they are actually not in favor of cash burn. They actually try to work on a model where less of the cash burn is there and more quicker, results are coming in, where a beta positive scenario is there, and that is how the valuations will go up in a faster way. Yeah.
And why are people calling this funding crisis as funding winter instead of funding summer or something?
Funding winter means, summer is, where everyone is active. Winter
Oh,
is people go into huddle, people are waiting for this to be over, and, they start again. So it's a temporary phenomena. Like in a winter, you go to Europe or Canada or any such country, people go slow in winter time, right? So that is why it is being termed as a funding winter, that it is
oh.
a temporary phenomenon, but automatically it will come back to normal situation. That's why this term is being used.
And could you throw some lights on grants and subsidy, like for which industry, where we have to see grants and subsidy?
Yeah, yeah. Grants, no, Government of India has very clear. If you go to Startup India website, you will find all the details on what kind of grants are available to various industries. And this is not only Startup India sponsored grants. There are different ministries also who are having their own set of grants. For example, biotechnology grants are there. Grants are there for agri businesses by Ministry of Agriculture. But as such, under the Startup India scheme, DPIIT has all these Atal Innovation Missions, right? So they are acting as a front for the government. So you approach these missions, you present your case, and you upload your application form on the Startup India website. Of course, you have to register as a startup, and you can choose which Atal Innovation Mission you want to approach. So 3 options are given to you. You can choose 1, 2, or 3, and your application will be marked to those Atal Innovation Missions. They will then interview you. They will go through your project, and maybe they select you for funding. So if you get selected for funding, they will give you a grant of, say, 5 lakh, 10 lakh, 15 lakh, 20 lakh rupees. So maximum is 20 lakhs, depending on your project and how you present your case. And not only this, there are debt funding grants also, where up to 50 lakh rupees you can apply, and you get at a very nominal interest rate that money as a loan, as a debt. So one is a grant, another is a debt support also.
Yeah. So grants, we need not have to pay
Yeah,
them
you
back.
don't have to pay. Grant means grant. It's given to you. You just have to. So it's mainly to fund the innovation and research, because at that time you are not making money, right? So you cannot earn money. So it is to fuel the research, to support the research.
Yeah. So grants are given by people, so it should be benefit to the society.
Yes, absolutely. Absolutely. Yeah. It is to support the startup ecosystem. So the grants are being given by the government to make sure that the people who are researchers, who are innovators, they get support when they need it the most, because so that they can spend time on the research work, and they can be successful by coming up with their MVP, with their product.
And could you also throw some light on the subsidy, like where we can know about?
Subsidy is basically, given, for example, agri subsidies are available. If you put a cold storage, you get 25% subsidy for putting a cold storage in an agriculture based area, right? So like that is one example I'm giving you. So if you are investing 2 crores in creating a cold storage, they will give you 25% subsidy. So similarly, there are subsidies are given in order to support the people who are taking initiative in the areas which require, which are in the national interest, or which are helping the people, or helping the economy as such, or helping the entrepreneurial system. So so that those subsidies are released based on those milestones which are there for these getting these subsidies, and you can apply for them and you can get from the government. Yeah.
Thank you.
Okay. So I think Viswajit, you wanted to.
Yeah, Rajiv, thanks for all the info.
Yeah.
My startup is a B2B, online B2B platform for industrial chemicals. And our tagline is digitalizing the chemical trade. I think it is very clear. Where we are trying to digitalize the whole chemical trade, which was predominantly before COVID-19 was by and large very, very traditional. Vendors and buyers both were mainly operating offline. So we are trying to give them a platform where both can come and discover themselves, so that there is a seamless process by which the vendors can also have access to new clients, and clients also have access to multiple vendors. And get the best competitive price of industrial raw materials. And not only that, apart from this discovery, we are also trying to facilitate them by giving them a better logistic experience, a better printing experience on trade lines, and also a better sales experience. It is not like that as a seller you list your products and after that you are just high and dry waiting for a buyer to hop in your platform and buy the product. Our team, we have a separate marketing team who is going to help all the sellers and the buyers to come together and closely follow up with them so that there is.
Your voice is a little bit crackly.
Hello.
Yeah,
It's okay
better.
now?
Yeah,
Okay.
better.
Yeah. And our team will be helping both the buyers and sellers to reach a deal. So that is the one of the USP we are offering, apart from the logistic as well as the fintech. And we have also planned to extend the warehousing facilities to all these B2B players in the market.
Right.
Now, our product has been released in the month of January this year, and till today we have more than 18,000 product listing on a platform, and we have almost like 600 plus of active users on our platform as of now.
Very good, very good.
But we are still in a pre-revenue stage because it is just like the chicken and the egg situation. Like, until and unless you have a high volume of product listings in your platform and a high volume of users, it is not ideal or it should be a little bit illogical to start your revenue streams. Right? So we are aiming somewhere around 1 lakh product listings and almost like 10 to 15,000 of active users in a platform probably will be reaching by the end of this year or maybe by early next year. Now to achieve that, we need funding from different sources. Right?
Okay.
So basically, my question is, what should be my strategy to raise funds in such a scenario?
See, you already have MVP, you already have a portal running, you already have some people who are utilizing your services right now. I think you need to make a strategy and change your gears in terms of how you should start earning the revenue from this platform, or you need to make a strategy of increasing the number of users who are using your services so that your platform becomes valuable, right? So maybe you have a strategy, okay, first you offer free and then maybe later they start paying, but the numbers and the idea is working, that you can establish, right? So I think you need to work on that. You need to actually make sure that more and more users come and start using your services, and make your platform more visible by going on social media platforms and participating in various forums. Also go full on Instagram and other such platforms where your visibility goes up, and your B2B users which are there, they become, the numbers become bigger. So once that is there, your model is visible to so the people who are in the similar industry. I think you are in chemicals or something, right?
That's right, industrial chemicals.
Industrial chemicals. So maybe big companies in the industrial chemical space, they will start noticing you, and they will be your first go-to investors, what I feel, and then of course you need to have a very attractive pitch deck and very attractive plan to discuss and offer that, okay, in 1 year, 5 years, in 1 year, 2 year, 3 year, and up to 5 year time frame, where this company is going to go and how you are going to make it big. So once you establish that, definitely you will find the investors. That's what I'm quite confident of. Yeah.
See, again, the problem still persists because the chicken and the egg.
Yeah.
As of now, monthly we are adding almost like 2,000 to 2,500 product listings on the portal, and we are adding 60, somewhere between 60 to 70 new users on the platform. with
Right.
with a handful of interns. We also have a digital marketing agency taking care of. We are present everywhere. We are present in all
Right.
the social media handles. Even our website is SEO compliant. So even with the right keywords, even our website also pops up
Right.
in the first ranking. So
Right.
all those, we also have a dedicated agency who is looking after the maintenance of our the maintenance and the iterations on the platform. So as far this infrastructure, we are somewhat doing a decent job. But the problem is now, if I want to scale up from 2,000 product listings to say 10,000 or 15,000 products in the month, that is where I need the funds first. You
Mhm.
understand the funds, because we have to increase that manpower to acquire this. If I am trying to do that with the present infrastructure I have, it will
Right.
take a lot of time. So basically, what I'm trying to do is I'm looking for budgets. I'm looking for funding to fund my expenses for marketing and acquisition right now. So
Mhm.
that is what I am trying to understand. Like, should I go for crowdfunding now or what? That is what my question is.
Yeah, yeah, definitely. You know, you can present your case to all these crowdfunding platforms. You can approach some key investors, as I mentioned, who are in this space and who know that this space is having potential. And choosing those right kind of investors is the key, whom to approach, because sometimes we are knocking at the wrong door, and
Absolutely, absolutely.
then we get frustrated. Oh, this guy is not understanding what I'm saying. So why not identify people who are already in this space and who know the importance of this space? They will be your first investors. Of course, we can discuss offline. This is
Of
and
course, I'll be discussing.
yes,
I will
yes,
discuss.
yes. And we can form a strategy where, in a very systematic way, you can present your company to the investors, and I'm sure you will get success.
Yeah. And sorry, the last, I just want to conclude. We are already in. We have already incorporated. Probably in the next 2 or 3 days, I will have my stuff with me. My pitch deck is ready. My valuation has also been done. Everything has been done. On our part, we are ready to go. The
Okay.
only thing is we have to form the right kind of strategy, and of course, I will be.
Sure, sure. I'll be happy to help you.
Thank you very much, Anil. Thank you.
Okay, guys, I think we had a very good discussion today, very interactive, very engaging. So it's very important for the startups to be mindful of investor expectations. Of course, you should be very clear about the due diligence and what are the potential funding sources, and you must focus on creating value and growth. If you are doing that, automatically the investments will walk in. So because investors are also looking for right kind of companies, right kind of teams which are there, and if you are doing your work honestly and your startup is very attractive in terms of creating valuations, you have lots of success factors which are there in this market, and you can really succeed. So thank you very much for joining in today, and I'm sure so we will continue our journey of meeting every Sunday at 11:30 a.m. And try and grow this tribe and share the knowledge with everyone. Thanks. Thank you.
Thank you, Rajiv. Thank you.
Bye bye. Bye bye.
Yeah. Thank you. Thank you.